To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello guys and girls. Hello everybody. This is the 2017? No. 2018? No. 2019 Northwestern Provincial paper. Let me write it down. 2019 Northwestern Province NW paper. Third term. All right. Paper 2. Is it paper 2? No, it's paper 1. It's paper 1. Can't you see the MCQs? Can't you see the MCQs here? It's paper 1. Right. Here we go. From 17th question, children. The accounting part starts. That's why we stopped at the 16th question in the previous video. Now this is the second video. We are starting from 17th. Accounting questions. Following accounting equation can be seen in a business. All right, A equals C plus L, or A equals E plus L. Doesn't matter. E means equity, C means not cat, it's capital. 100,000 assets. Out of 100,000, it is made up, 100,000 is made up in this manner. 75,000 owner's equity, 25,000 external liabilities. Okay, that is how C plus L is equal to A assets. Basic accounting equation. Select the correct accounting equation after occurring the following transaction. After this transaction, how the accounting equation changes. That is what they're asking. All right. After this transaction, owner has taken 5,000 from the business for his personal use. All right. Beautiful, beautiful. Owner has taken 5,000 from the business for his personal use. Let me tell you, or if owner has taken 5,000 out of the assets, 5,000 means cash. Cash, right? Cash is an asset. So if he has taken money from the business, money decreases. So here 5,000 decreases. 5,000 decreases under assets. Yeah? Don't you get it? Don't you get it? It's simple. Cash has been taken by the owner for his personal use. So cash decreases under assets. At the same time, if it is a drawing, this transaction is called a drawing. If it is a drawing, if owner has taken business cash for his own personal use, that decreases his capital too. So here under capital, I should put minus 5,000. Minus 5,000. Okie dokie. This here also decreases. So it should be minus. Here also it should be minus. When 100,000 is subtracted, when 5,000 is subtracted from 100,000, it becomes 95,000. Okay, becomes 95,000. So we have 95,000 here and here. And when 5,000 is subtracted from 75, it becomes 70,000. Assets 95 here. So we have 1, 2 answers. At the same time, equity 75 minus 570. And there you go, that is the answer. Yeah, so that is the answer, second one. Let me clear out. Okay. Right, second one is the answer. Done. Next one. Select the transaction which is not affected to the equity. Okay, select the transaction which does not affect to equity. Paid rates 400. It affects to equity. It affects. Paid rates means expense. Expenses decrease equity. I have told you this more than like 20-30 times. There are only 4 transactions, 4 events or transactions which can affect equity. 4. Additional capital increases equity. Drawings decreases equity. Incomes or profits increases equity. Expenses decreases equity. Okay, so additional capital and incomes increases equity. These two increases equity. Okay, these two increases equity. Additional capital and incomes, and these two decreases equity. Drawings and expenses decreases equity. This is an expense. Yeah, this is an expense. So it actually affects. It affects. Okay, this affects. Can't take this. Which does not affect equity. Does not affect. Received additional income. That is income, so it increases equity. It affects. Paid to creditors 5,000 from the owner's private cash. Owner is putting in more cash to the business. That also affects equity. Increases. It's like additional capital. Owner putting more cash to the business. Paid accrued electricity charges 2,000. Accrued electricity charges means electricity expenses, but a part of the expense which was not paid. Now it is paid. It's a decreasing of a liability. It's not an expense. Expense has been already here. The expense is already the electricity expense. In the fourth answer, it's not given as electricity expense. It is given as paying accrued electricity. Accrued electricity means, children, electricity charges which should have been paid. It should have been paid, but it was not paid. Accrued. We all know that. You know that, I know that, we know that, and everyone knows that. Accrued means a liability. It's a decreasement of a liability. So this is the answer. It does not affect equity. Next one. Question 19th. A check received from a debtor amounting to 5,000 is deposited in the bank at the time of receipt. So document is number 1. Prime entry book number 2 for recording about transaction. Select the answer for above blanks 1 and 2. Okay. Yeah. It's a fill in the blanks question, but read the case carefully. Check received from a debtor. We receive a check. A debtor has not paid his debt, Naya, by using cash. The debtor has given us a check. Okay, the check was received and deposited at the same time. So 2 incidents. Is it 2 incidents? No, it's not two incidents. It's the same incident. Check received from a debtor. Okay. Check received from a debtor. Okay. Huh. Deposit 5,000 is deposited in the bank at the same time. At the same time, the debtor has directly come to us, but we have sent the check to the bank. Check directly sent to the bank without keeping the check in our cash drawer. Cash drawer. I said cash drawer. You don't know what is cash drawer? Lachu. Putting the check into the lachu without doing that. Didn't do that. Send the check to the bank. So source document is number one. Source document is number one. Prime entry book is number two for recording the transaction. If it is directly sent to the bank, the source document is the deposit slip, check deposit form. We have two answers. This one is the check deposit form, check deposit slip. You know, when you go to the bank, when you deposit a check in your account, you should fill a deposit slip, mention the check number and the bank code and everything, amount on the check, and fill the deposit slip. Give the check with the deposit slip. That is the source document. Source document is number one, so we have check deposit slip in two answers. Then prime entry book is the bank account. See why? Bank account, bank money increasing. Fourth is the answer. Got it? Yes. $20. Purchase trade stock 20,000 on credit of Aravinda's business. Select the related double entry to record the above. Purchased trade stock. If it is trade stock, it's a purchase. It's a purchase transaction. Debit the purchases account. Credit the creditor's account. It's purchase on credit. Purchases debit on credit. See, on credit. See, creditor's credit. Double entry is that. Trade stock debit. No. Trade stock debit. No. Purchases debit. Cash credit. No. Purchases debit. Creditor's credit. Yes. That is the answer. Clear out the drawings. Draw one line under the correct answer. Fourth. Next question. Following information is extracted from Harsh's business for the year ended 31st December. Information is extracted from Harsh's. Business is Harsh's business. Capital 500, sales income 75, commission income 50, expenses 50, drawings 10. Equity of Harsh's business as at bingo. Again, that information which I gave you like 5-6 questions before. Transactions which or events, transactions or events which affect equity. Equity of Harsh's business as at 31st December. Following information is extracted from Harsh's business for the year ended 31st December 2018. Same year. So what are they asking? What are they asking? Well, they are asking whether this Harsha is in his business, whether the equity of Harsha has been changed due to these given transactions. If the launch of the business at the beginning of the business, if the capital was 500,000, in the launch of the business, in the beginning, if the capital was 500,000, incomes increase capital. Incomes increase. So 75,000 should be added. Again, 50,000 should be added. Answer is how much? Answer is how much? 550,000, 625,000. 625,000. 625,000. Okay. From that, expenses should be subtracted. Expenses should be subtracted. So 50,000 should be subtracted. 50 should be subtracted, and 10 again should be subtracted. That means 50 plus 10, 60 should be subtracted. 60 should be subtracted. It's not clear. It's not clear. Let me do it. Oh, okay. 60 should be subtracted. 50 plus 10, 60. Come on, hurry up. 60 should be subtracted. Now get the answer. 625,000. 625,000 subtracted by 60. How much? Do your calculations. It's 565,000. Yeah, I think so. Yeah. There. Answer is here. 565. Done. Next question. Nimal's business purchased trade stock worth of 25,000 from Kamal's business. Nimal is buying from Kamal. So Nimal purchasing goods worth of 25,000 from Kamal on credit. What are the important points? On credit, purchasing trading stock on credit after deducting 10%. After deducting 10%. So 25,000 out of 25,000, if I calculate 10%, 10 over 100, answer is 2,500. That 2,500 should be deducted now, because it is a deduction, discount. This 2,500 should be deducted. I mean subtracted. It becomes 22,500 then. Then it becomes 22,500. Okay. Asking the corrected journal entry to record the above transaction. What type of a discount is it? That's what you should know to mark the answer. If you don't know whether this is a trade discount or a cash discount, you're going to mess up. What is it? The discount? I'm talking about this discount. I'm talking about this deducting 10% discount. Yeah? Yeah. That is a trade discount. Discounts given when purchasing goods or at the point of sale. At the point of sale. You know, when you go to shops, when you go to buy a pair of shoes, or maybe to buy a phone, or maybe to buy something, let's say to buy a bag, you go to these shops, and on the tag there is a tag price that is called the list price, on the tag of the good. You turn the shoe around, or you turn the bag around, you open the bag, and you check whether the space is enough, you close the bag, and finally if you like it, finally you ask, how much is it? Or you pull out the tag and you see, oh, it's 6,000. It's too much. It's too expensive, right? And your friend also says, what do you mean? And you can leave the shop. But when you try to leave the shop, the shopkeeper or the salesman will say, sir, it's an imported item, sir, it's high quality, we'll give you a discount. That is the trade discount. You know that. Okay, so purchasing trading stock 25,000 from Kamal on credit after deducting 10% discount. This is the discounted price. This one, discounted price. This is the discounted price. Okay, discounted. After discount is deducted. Discounted price. Got it? It should be debited to purchases account, credited to Kamal's account. Because from Kamal, 25,000 from Kamal is the creditor. Purchases debit 25,000? No, 22,500. Can't take it. Then second answer, Kamal debit. Purchases credit? No. This one also no. Purchases debit 22,500. Okay. Kamal credit 22,500. That is the answer. This one. Purchases debit, Kamal's account credit. Fourth, not the fourth one, third one. Yeah. Next question. Following information is given for you. Sold trade goods 5,000 on cash. Purchased a machine 100,000 on credit. Purchased trading goods. Purchase trading. Yeah, it's a credit purchase. Purchase trading goods, credit. Owner has taken cash 5,000 from the business for his personal use. Okay, this is 20,000 on credit. This is owner has taken cash from the business. Cash 5,000 from the business for his personal. It's a drawing. Select the transaction which is recorded in the general journal. Okay. That's not a difficult question, right? Simple question, right? You should know your prime books, right? Selling trading goods on cash goes to the cash book. Purchasing machine 100,000 on credit. That is not trading goods. It's a non-current asset. So it goes to the general journal. 1. Purchasing trading goods on credit. Purchasing goods, it goes to the purchases journal. Goes to the purchase journal. So no, not to the general journal. Purchasing trading goods on credit. Credit, no. On credit. These things only you should notice. On credit. Here, on cash. Trading goods. No? Trading goods means purchases. Journal. This is their in the A transaction A also. Trading goods. No? So, not going to the general journal. Machine means it's a non-current asset. That goes to the general journal. Then, owner has taken cash from the business personal use. That is a drawing. Drawings anyway go to the general journal. B and D. Oh no! Well, that was a surprise. Fooled me. Owner has taken not goods. Owner has taken cash. 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 If he has taken cash, it goes to the cash book, not to the general journal. So only B. Remove the tick. Only B. Only B. Next one. 24th. Following two transactions were occurred in Amal's business. Sales on cash, paid salary. Two transactions were occurred in Amal's business. Selling on cash, that means selling goods for cash. Yeah. Then and there, take cash, get cash, and sell the goods. 12,000. Paid salary 14,000. Select the source document used to record about transactions in and prime entry books respectively. Sales on cash, you get cash to the business, it's a receipt. Paid salary, you spend cash out from the business, it's a voucher. So receipt and payment voucher, here we go. Receipts and payment voucher. Third one. When you receive cash receipt. Cash comes in, right? So cash receiving, right? The document, the bill. When I say the word bill, you should take a bill when you go to a shop, when you buy goods. You ask for a bill. Mudalali bill dan. It's not like Mudalali plenty dan. No. You don't get a bill for a plenty. But if you buy like high valued goods like a TV or a LCD, LED or a home theater system or a phone, you take a bill. That is a source document. So selling on cash means the business gets cash. The bill is the receipt. Business is receiving cash. So the bill given is the bill issued. The source document issued is the receipt. And for payments, voucher. Next question. Petty cash impressed 5,000 as at 31st March. Petty cash balance 800 and the reimbursed amount was 5,200 on that day. Now, what is that? Petty cash impressed was 5,000 of a business. Circle it. Keep it in a box. Petty cash impressed is 5,000. 5 only, okay? What do they say after that? As at 31st 3rd 2019, petty cash balance was 800. Okay. So there is a petty cash system in a business. Impressed is this. Impressed. Let's think that impressed is in the box, and that is 5,000. The impressed is 5,000. Okay. As at 31st March, petty cash balance was 800. Out of the impressed, how much was spent? a lot of expenses, petty cash payments gone. Okay, and the remainder was only 800. How much is the balance? 800 is the balance. Okay, is the balance. Then how much has been spent? How much has been spent from 5,000? If only 800 was remaining. 4,200 spent. 4,200 spent. You get what I'm saying? Remainder 800. Balance 800. Done. And the reimbursed amount again was 5,200. Oh. Instead of this 4,200, 5,200 was given back as the reimbursement. Then the petty cash becomes, the interest becomes again 6,000, right? It's an increase of 1,000. What is the increased amount of the petty cash interest? 1,000. Simple. Yeah, I hope you get it. Did you get it? Using the following information, answer questions 26 to 27. Okay. Using the following information, answer questions 26 and 27. The balance of the bank account was 15,500 of a business as at 31st October 2019. And the balance of the bank statement was different. When you have a look at this, when you see this sentence, you know that the question is from bank. Yeah, you are correct. Reconciliation. The question is from bank reconciliation. Balance of the bank account was different and the balance of the bank statement did not tally. These things are given for bank reconciliation. Yeah. Following reasons were received or revealed. Bank charges. Bank charges. Bank charges the bank has recorded, but we haven't recorded in our bank book, in our bank account. The business bank book that we prepare, cash book and bank book. In that bank book, we haven't recorded, so this goes to the adjusted bank account. Bank charges. Direct remittance is also the same. Goes to the adjusted bank account. Adjusted bank account, yeah. Insurance premium paid on standing order. Standing order is the same also. It should go to the adjusted bank account. Deposited but unrealized checks. We have deposited checks. Already we have recorded in the bank account. So deposited but unrealized, those checks do not go to the bank account again. Already recorded. Those values go to the unrealized. Those values go to the bank rec. Bank reconciliation. That is what we call by this name, bank rec. The bank reconciliation. Okay. The transactions which are adjusted in the bank balance. The transactions which are adjusted in the bank balance, or it's adjusted in the adjusted bank account. A, we already marked. We have already marked. No, my dear children, can you see this? A, I have marked C. C, man. B also I have marked C. Not C, B also I have marked. C also I have marked. C. I just went back account. C, man. ABC. Answer is 3. Answer is 3. Yeah. Adjusted bank account. Okay. Oh, same thing, same case. Same case, yeah, same case. Yeah. Yeah, same case. Oh yeah, 26 and 27, yeah. 26 and 27. Yeah. So this is the 27th. The balance of the bank statement as at 31st. Oh, okay. For that, you must prepare the bank rec, right? You don't need to prepare the statements, but we'll do a calculation. They're asking the balance of the bank statement. Okay. We'll go to this slide because information is marked on this slide. Now, when you take the balance of the bank account before adjusting 15,500, balance of bank account 15,500 before adjusting this one, got it? 15,500, right? Yeah, that is the original balance before adjusting. Later following reasons were revealed. Now, bank charges go to the adjusted bank account, which means to adjust, which means to adjust the original balance. This should be recorded in the adjusted bank account. This one, bank charges. Bank charges, what? From bank charges, what is the effect to the original bank balance? Because of bank charges, original balance reduces. We don't know that the bank has taken from our account their charges, so we don't record these bank charges. When the statement comes from the bank, then we open the envelope and we take out the statement and we open the statement and we see the bank charges that they have taken should be deducted. Again, now this is recorded. This is done. This is done. Again, direct remittances of investment income received. We don't know that we have received this, the direct remittance, 5,000. We have received, so added. Direct remit should be added. 5,000. Yeah. Next, there's another item, that is this one. Insurance premium paid on standing. again paid by the bank, standing order. Insurance premium paid on standing order, 2,500. Again paid. Yeah. That means paid. Money going out, which means should be deducted or subtracted again. Standing orders. Now take the adjusted bank book balance of the business. Adjusted bank account balance of the business. How much? 15,500 minus 500, it's 15,000 plus 5,000. 15,000 plus 5,000, 20,000. 20,000 minus 2,500, 17,500. 17,500. Okay, got it. That is the adjusted adjusted bank account balance. Okay, 17,500. This too is not sufficient because there's another information given. That is this one. D. Deposited but unrealized. We have deposited checks. Depositing means we have sent these checks to be added to our account. When we send those checks, we debit because it's a money coming in, money increasing in the bank account. We debit, but the checks have not been realized, unrealized. That means the bank has not yet added. Maybe the checks have not gone to the account yet. Maybe they are still in the queue. Those are unrealized checks. That is the meaning of unrealized checks. So, in this balance, if we have debited, if we have added that 4,500, we should subtract it. 4,500 subtract. Then what is the final answer that we are going to get? 17,000 subtract 17,000 minus 4,500, 13,000. This is the bank statement balance. Got it? So this calculation was done for the next question, right? For the next question, right? Yeah, this calculation was done for the next question. Next. This one. Balance of the bank statement. 13,000. Here it is. Done. Another case. I don't like cases. It takes time. Paid electricity bill for 5,400. Paid electricity bill 5,400. This one. Case, man. This case. Paid electricity bill 5,400 has been recorded in the electricity bill account as 4,500. Paid electricity bill 5,400. What, to which account debit and to which account credit? Electricity bill account debit because expenses are debited. Electricity bill account debit, cash credit. Double entry. Paid electricity bill 5,400 has been recorded in the electricity bill account as 4,500. That is a bit stupid, right? That is a bit stupid, right? No, these things happen, okay? Paying 5,400 but recording 4,500. Recording 4,500. Less. As the above error. Okay. Read the question and check what they're asking. Maybe they're asking, how much is less in the electricity bill account? You thought so far about the error, but they're asking, what is the shortage? These things happen. What are they asking? As the above error, it is not affected to the equality of the trial balance. It does not affect the trial balance. These type of answers only they expect. So no need to correct this error. Okay. What has happened now? This account, what account? The electricity bill account. In that, electricity bill account, in that 5,400 should be debited. Electricity bill 5,400 should be debited, but recorded in the electricity bill account as 4,500. See the case now. Recorded only 4,500. Recorded as 4,500. So how much is less in the debit side? How much is less? 900 is less. Why? 5,400. Yeah, it's here. 5,400 and 4,500. What is the difference? 900. 900 less on the debit side. Okay. Only in the electricity bill. So debit side 900 less means because of this electricity bill account error, trial balance also debit column will be less 900. The trial balance also debit column will be less. Lesser. Less 900. Because of this account debit side because in this account, electricity bill account, debit side 900 is less. When this balance goes to the trial balance, TB debit side also 900 will be less. Simple. So this, it is not affecting the equality of trial balance, we can't take. It affects. It is generated as it generates a credit balance of 900 dollars. It generates a credit balance of 900 in the suspense account? No. It generates a debit balance. This 900, because it is less in the debit side, 900 should be entered to the suspense account. Yeah. 900 should be entered to the suspense account in the debit side because the debit side is lesser in the trial balance. So generating a credit balance of 900 in the suspense account? No. As the credit column of the trial balance is decreased by 900 and it should be transferred to the suspense account. No. The debit column of the trial balance shows 900 less. Here we go. I showed you. Don't say that I didn't show you. Debit column of the trial balance shows 900 less. This is the answer. See, man. Last question of this video. 30. No. This is 29. Same case. Yeah, same case. Same case. Same case. Now what? They're asking correcting journal entry to rectify the above errors. Oh man. I should have done that. You should have done that in the previous slide. Let's do that in the previous slide. The correcting journal entry to rectify the above error. How to correct the above error? This error. Let's do it here. If the electricity bill debit side 900 less, you should enter 900 to the debit side. You should enter 900 to the debit side. This is the first entry. This is the first entry. Enter 900 to the debit side, first entry. Okay, enter 900 to the debit side. So electricity bill account, debit 900. Nowhere else when you enter electricity bill account 900, the debit column of the trial balance has the lesser 900. Debit column of the trial balance has the lesser 900. So suspense account is entered with 900 to the debit side. If this error is the only error, you debit electricity bill account 900, credit the what? This 900 has gone to the suspense account now. This is the suspense account. Suspense account, debit side 900 is there. Suspense account, debit side 900 is there. This 900 is there. So debit electricity bill account 900, credit suspense account 900. First entry, second entry. Let's go and see. Debit suspense account, no. Debit electricity bill account 5400, no. Debit electricity bill account 900, yes. Credit suspense account 900, yes. This is the answer. Third one. Last question. Select the incorrect statement relates to not-profit organizations. Select the incorrect statement which relates to not-for-profit organizations. Right, let's go through the given answers, shall we? Receipts and payment account is prepared on cash basis, and the income and expenses account is prepared on accrued basis. Wow. Well, that is a surprise, huh? Receipts and payments account is prepared on cash basis, and income and expenditure account is prepared on accrued basis. They're talking about the non-profit, not-for-profit organizations, and it is correct. It's correct. Receipts and payments account is prepared on cash basis. Yes. Yes, it's correct. It's correct. That's correct. Income and expenditure account is prepared on accrued. That is also correct. Income and expenditure account means, what is this, children? This is the income statement. What is this? Income and expenditure account means what? This is the income statement. Don't get confused, okay? Income statement. IS, income statement. So it's correct. They are asking to select the incorrect statement. Incorrect. Second, receipts and payments account shows the cash balance and income and expenditure account shows the profit or loss. It's correct. It's correct. This is correct too. Receipts and payments, yeah, show the cash balance. And income and expenditure account show the profit. Yeah. Third one, receipts and payments account is very similar to cash book, and income and expenditure means income statement is very similar to the profit or loss. That is also correct. The difference of the income and expenditure affected to the accumulated fund. Select the incorrect statement relates to not right or not. Okay. Well, it seems like all four are correct. What to do? Select the incorrect statement. Receipts and payments account is prepared on cash basis, and income and expenditure prepared. This is correct. Income and expenditure account is prepared on accrual basis. Income and expenditure means the income statement. Okay, I told you once. Receipts and payments account shows the cash balance, and income and expenditure account shows the profit or loss. No. Income and expenditure account shows the surplus or deficit. It is the same as profit or loss. Then third one, receipts and payments account is very similar to the cash book, and income and expenditure account is very similar to the profit or loss. That is also okay. Difference of the income and expenditure is affected to the accumulated fund. That is also okay. Answer is third one, no second one. Receipts and payments account shows the cash balance, and income and expenditure account shows the profit or loss. No. That is the mistake. Income and expenditure account shows the surplus or deficit. It is similar to profit or loss. I mean, it's the same as profit or loss, but you don't say profit or loss. You say surplus or deficit. Well, that is the 30th question, guys, and we are going to end this video, this chapter from the 30th question. This is the Northwestern province. Northwestern. Okay, not Western, it's Northwestern. 2019 paper. Second video in the first paper we have done up to 30th question. MCQs. 10 more left. I'm going to see you again with the remaining 10, and we are going to end this paper in the next video. This is the Northwestern NW 2019 first paper. Hoping to see you again. Have a good time. Thank you.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.